These three stocks in June should not escape your eyes and ears, so pay attention. We'll be sharing with you our thoughts on them. Neither I or Jonathan own any shares mentioned on this video, and none of what we say should be taken as financial advice. Do your own research. Now guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. So as usual guys, not buy or sell call, but we're going to be discussing on how the management and the company is faring for these three companies, and they are Revenue, FPI, and a cake maker, SDS. So let's start with Revenue Group. If you've been following the market for quite a while, you will know that they've been in massive drama. It's probably the biggest drama.
Yes, exactly.
I think, is it?
I mean, never see before a company announce that somebody budge inside their office and steal documents that run out.
I think this and Edeltech Me and Me Technovation are probably the biggest dramas in 2023 so far. Maybe there'll be a third one, which is Star Media and The Edge, but you know, that's a story for another time. So Revenue Group, for those who don't know, they are involved in, I don't even know what,
EDC terminals.
Yes,
Yeah.
You know those white color terminals you see when you pay at a restaurant. They make those terminals and try to sell it. Or in fact, they make them. I think they just resell it, right?
Yes,
they're just a middleman. Right? Anyway, so you can see they used to be a darling, right? When they IPO, I was actually there at the IPO briefing. I still remember. The IPO, as you can see, 50 cent all the way went up to $2. That's like a 4x, and then from $2 now it's 20 cents. That's a 80% ish decline.
Yes,
quite painful.
Yes, very, very painful.
And you can see the quarterlies, they've been it's been tough.
Yeah, it's been in a red for quite some time right now, and we shall take a look why it has been dropping. So number one is that sales wise is not really doing that well. I mean, with all this management turbulence, right? I mean, a lot of chaos. I believe also the business operation got affected a lot. Yeah, and
sure.
I mean, you can see that revenue is like down 50%, which resulted their bottom line to actually down even more, which is about close to 300%. Yeah, that's actually very sad. And another thing to note that because of all of these consecutive quarters of loss making, right? They actually their cash balance is actually reducing quite a lot already. So it's also close to 50%. They are actually burning cash every single quarter right now if they don't manage to turn around. And actually nothing much to comment on other than they have a very little debts for their current debt, but their long-term debt is still quite substantial, and they are soon going to be a net debt position versus the previously, which is a net cash. Not so good times for Revenue. And last one, obviously, is cash flow. They are not really getting any cash inside the company at the moment. Actually, nothing much to comment about this other than they are doing very bad right now. And if you can see that their segment breakdown, one of these segment caused the revenue contribution to drop quite a lot. So it's coming from their electronic transaction processing. I believe, I'm not sure why there's a huge drop. Maybe because some of their partners or maybe even suppliers or maybe even customers are pulling out from using Revenue Group's services. Or it could be because the contract got like expired or something. I'm not too sure what is the details, but yeah, it's actually a huge drop from 10.7 million dropped to 1.2 million. Yeah, that's actually a very, very big drop. It's not a good sign for revenue at the moment.
But I think the key is the fact that even they are more stable business, like the EDC stuff is dropping as well.
Yeah, it's dropping quite a lot. But this one is a shocker lah, the electronic transaction processing. I thought it's going to be a more recurring, more steady than EDC, but I was proven wrong. Yeah. And one more thing that is very interesting is that they actually gonna acquire this company called Innovative Holdings. Which
probably is contributing to the net debt position, I'm guessing.
Could be. And they're actually paying it in cash.
Exactly.
Cash balance is dropping. They're paying about 36 million for this company, and they're buying it from Hong Seng Consolidated Berhad. So if you don't know about Hong Seng, I think we also did cover this company in our previous video. They have a lot of different businesses like your glove, your healthcare, your COVID test, a bunch of stuff like that, your EV, and they're actually buying for 6 million more expensive. So in January 31st of 2023, actually Hong Seng acquired this company for 30.8 million. So in a span of like 4 months, they are paying it like about 5.15 million more expensive, which is actually, I don't know why they actually plan to buy this, but we shall see. But this is just a general business description on what Innovative does. Is basically just your user onboarding process services or solution services. I think it's no different than your CRM and whatnot. It's just to guide your customer to log in, to register their data, and then they manage to capture all of it. It
just sounds like I don't know whether the right word is desperate attempt to try and transform the company a little bit.
Yeah, and not to mention
it's reactionary. I feel like this is reactionary.
Correct. And previously also they did mention that they want to diversify into property development.
So it's like things are doing bad, then like, I'm going to do something, I'm going to show the world I'm doing something. But I mean, it's not about doing something, it's about doing the right thing.
Yes, correct. And worse is that they are actually committed to buy all of these companies. So it's really, very bad. Okay, so the final takeaway is that they're still in a court case with their, I believe is ex-founder. It's not ex-founder, it's founder.
The top guys.
The top guys, the Ng brothers. And it still have not been solved yet. So that's something you need to know. And also, the next takeaway is that first they propose that they're going into property development. Now they want to go into CRM. So it's a very confusing kind of like business direction for revenue. And the last one, which is very interesting, is that Mr. Leong Ka Chen, he is, I believe, the CEO for GHL system. Which is the competitor of revenue. So he actually joined revenue for a while in January 2023, but then he decided to leave. Not really leave. He just want to serve. He just want to serve as an advisor. So those are so far, these three signs are very I would say it's like an orange flag for me. Definitely the management execution right now is, I think, it's not really doing that well. So any takeaways for this?
No, I think that's good.
Okay.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
So the next company we're going to be looking at is FPI.
So FPI is a fundamentally solid company, huge dividend payer. It grows above average when it compared to other Malaysian companies.
And it's also a company that is highlighted a lot in Casey Chong's dividend investing book.
Which we reviewed back in the day. So you can check out the review.
Exactly. So if you look at the recent months, it has actually down 34%. Quite a bit of a pain. We shall have a look. So I think number one is that you can see their Q1 results has not been doing very well. If you compare between this one versus their Q1 2022 and Q1 2021, it's down pretty a lot. From like 20 and 30 million in profit to now 9 million only. And so you can see that their revenue is down 57% and profit is down 54%, as you can see from the previous slide just now. I won't really go too much on details on this. But one good thing about FPI is that they have close to zero debt.
Yes.
And huge amount of cash. So they have like 344 million in cash. I believe their market cap is around, so it's like 50% of their market cap is in cash right now. No debt, actually. It's kind of like non-existent. So that is a plus point for FPI. Cash flow wise, they have been in a negative at the moment because of this increasing in working capital. I believe there is more receivables, more inventory inside their business. But they didn't really highlight what is the specifics for both all these three items. So they just say that it's increasing in working cap. That's it. And another interesting thing is that they have this RPT. So this actually gives you hint on maybe who is this supplier or who is this customer that FPI is actually serving, because they rarely disclose who are them. But in their RPT, who is also the major corporate shareholder, which is Winstron Corporation. So you can see that the sales of speaker to Windstrong actually dropped quite a bit from 32 million to now 6.8 million. So this tells you a lot about the speaker demand at the moment is actually very depressed. It's very bad right now. I think also partly is also because of consumer spending. They don't really have much money to spend already. And this is the final takeaway. So yeah, number one is the speaker demand has been dampened. Maybe it's going back to 2016 to 2018 level. So if you look at 2016 to 2018 level, you're looking at this price now. Yeah, I'm not sure. Maybe I could be wrong, but looking at how they actually deliver the numbers, and if let's say they continue to do what they are doing right now, there's no improvement in numbers. Maybe there will be much more. There will be more weakness in FPI. But don't quote me on this because I'm not sure about how sustainable their business is. So that is something you need to be aware of. And then another one is that they actually spend quite a number of money into R&D. So they spend like 50 million every single year. So far have been 2021 and 2022. Just to try to make their operation more efficient. And last but not least is that they are actually a very labor dependent business. Those speakers, they have to like assemble, so they hire a lot of foreign labor. So about 73% of their total employees are coming from foreign labor.
Yes.
And yeah, that's actually one of the, I believe it's more cost effective than actually making a machine. But they did highlight that they are trying to build more machines and automate the processes. But they don't divulge or disclose the numbers of it. But yeah, that is FPI for you.
And the last company is SDS. I think this is a positive one. No, not so positive.
No.
You see, it's down 22%. Guys, they're basically a bakery house. They are quite relevant in Johor, if I'm not mistaken,
yes,
right?
Correct.
Very relevant. Johor. I've actually never tasted their cakes before and all that.
Yeah, because they are not here yet.
Exactly, right?
But they are kind of expanding here, so we shall see.
Yeah, that's very interesting. So you can see the numbers. I'll walk through them. I mean, it's decent, right? Definitely compared to the other two. This is a company that we identified, but unfortunately, we didn't put any money into it.
Yeah.
Otherwise, we'd be quite a bit richer.
Yeah,
now.
actually, we discovered it in like around here, June.
Yeah.
But back then, I was thinking that this is a tech company. Is this a tech company? But this is a bakery company.
Yeah, it's crazy, right? Yeah, so you can see the profits, all that generally is on some sort of uptrend. Growth is slowing a little bit. That's about it. And you're looking at, yes, maybe you want to share with us.
So in their latest quarters, revenue is up 20%, but then they actually dropped 21% in profit. I think it is still okay. The reason is because of these selling and distribution expenses increase and also the cost of goods. So I mean, inflation. So
But it's an insight, right? It could be that they are unable to pass on the cost.
Yes.
Or maybe they choose to keep the prices at where they are so that they can grow the volume, right? So you can see the volume is actually up quite a bit.
Yes, exactly. But if you look at cumulatively, it's still doing pretty decent. This is a net cash company, 27.5 million.
That,
as compared to like around 14, 15 million kind of like that. So that is something for you to know. Cash flow also very positive.
Look amazing.
It's very clean. So they have actually two breakdown. One is retail, one is like wholesale segment. So retail is more of like going to their bakery shop and buy. Wholesale is basically they buy the huge product in bulk and then they sell it to the retailers in a cheaper price. And both are doing pretty decent at the moment. So this is a takeaway. Number one, if you didn't watch our previous video, we did cover SDS previously, and I said that this company is trading at a tech valuation. I mean, it's very expensive. Like I believe like 20 to 30 times PE. So I was like thinking this is not going to sustain. Yeah, now it's like 11. Yeah, so it kind of proved me wrong that they actually managed to deliver the numbers. And right now they actually have another segment other than bakery, which is cafeteria. So I noticed that they are selling like foods, like cafe foods, other than just bread and cake. So that is a pretty interesting business diversification. Not really diversification. Is it a horizontal kind of like integration kind of thing?
Right.
Yeah. So but that's it for SDS so far. To me it's okay. But then will I like decided to hop on the train again? Probably not, because this is at the end of the day, this is still a bakery company. So I don't really fancy bakery industry, I don't really see what is the positive outlook for it in the future. But but that's just me. Any final comments?
No, I think SDS seems like a very well-run company. If you believe the story is still true, certainly a 20% decline means a 20% discount. But again, you do not have to have an opinion.
Yes.
Right.
Exactly.
But maybe we should do a deep dive on it.
Yeah.
Maybe. Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback, as long as they're constructive.
But anyway, this is the FIRL Pro's performance so far. Everything's on the green. The Telegram portfolio also, it is back to the green. I believe we did a few changes in the Telegram portfolio. So if you want to know what are those changes, make sure to join the FIRL Pro. I mean, we did exit some of this position already because of the valuations becoming more expensive. I won't tell you what's the hints. The hints all inside the Telegram group. But if you want to know more about FIRL Pro, we have free sample for you. Basically, we write a sample report, and also we show you how we present our SIB program, which is our another course, slightly more, actually more affordable than FIRL Pro. But you can check it out. The free samples are the links are all in the description and also in the comments down below. And that's it.
Guys, thanks for staying all the way until the end. Always thankful for your support. If you have any thoughts on these companies, just share them in the comment section. We typically respond to pretty much all comments. And guys, see you in the next video.